All right, guys, welcome back. Welcome back. So, those of you who have been following me for some time, years now, um, welcome back. Whenever you see a whiteboard, it's going to be a really good video, right? Because all the shit I'm putting in this video is coming from my mind. It's coming straight at you from my mind. Okay, so we know that I'm really into finding out who's trading against who, right? I'm all into limit bears, stop bears, limit bulls, stop bears. So, really quick recap, then we'll get into what the video is about. Limit bear, they see a bar going down, and they've already sold the top of it. Okay. A stop bear waits until a bar closes at its low and sells right here. So this is a stop bear, and this is a limit bear. Now you could just think of a stop bear as a market bear. Okay, he's pressing buy the market because when a stop order is hit, it turns into a market order. When you put a stop in the market, you're telling your broker, get me in at the next price. Okay, you know this by now. Okay, the opposite is true on the upside. So we see a bar going up, a limit bull bought down here. Okay, and when this closed at its high, a stop bull bought right here. Okay, now for the most part, now limit orders can't move price, right? We know that. They just sit in the market. So they wait for orders to either come down to them to be filled and they can stop a movement, or they wait for orders to go up to them and be filled and they can stop a movement, but they can't make the price move. Okay? That's what the stop orders and market orders do. So while limit bear started this order, okay, you can think of it that way. Stop bulls were active here because you had to have stop orders to move the price, right? So, but this is just a broad generalization of the market participants, okay? So, tonight I'm going to show you a way that you can go back on any chart and you can see what would have been profitable. And it's going to be very interesting, very eye-opening, and I think you'll really enjoy it. So let's do that. So, familiar with this? Let's go over here, zoom out. All right, this was an actual chart that I took here from somewhere, obviously. Let me see if I can pull it over here. All right, so this is a trading range. You can clearly see it's a trading range in hindsight. It went up, it went down, it went up, it went down. Looked like it was going up again, okay? What we're counting here is we have a matrix on the side. We're counting the number of times a green bar is followed by a green bar, a number of times a red bar is followed by a green bar, a red bar is followed by a red bar, and so on and so forth. So I have the results here already, but we're going to go through it one by one. So I'm going to erase these for you. I'm going to get rid of these. Let me see here. It's the fastest way to do that. Let's do this. Delete that, and then we'll just replace the little graph there. Okay. All right, so first bar here is a green bar. What is it followed by? It's followed by a green bar, so that gets a mark. Green bar followed by green bar. Next bar, we're going to mark it here. Next bar is a green bar, and it's followed by a red bar. So green bar, followed by a red bar. Okay, you get it? All right, next bar, red bar, followed by green bar. Red bar, followed by green bar. That's one there. Next one is green bar, followed by green bar. That's here. Okay, green bar, green bar. Green bar, followed by red bar. That's here. Green bar, followed by red bar. Red bar, followed by red bar. Red bar, followed by red bar. Okay? Red bar, followed by red bar. Red bar, followed by green bar. Red bar, followed by green bar. Okay? So what do you see here right now? What do you see here? Before we go any further, you see that they're exactly even. Okay. And what does that tell you? That tells you that you could have made money doing pretty much anything in this range up to this point. Okay. Yes, the bulls were more dominant because it looks like it rallied more than it's fallen, but you could have been any kind of participant here. Had you been a limit bull, okay, you waited until the price retraced and you bought this. Bam, you made money. Okay. Had you been a limit bear, you waited until the top of a candle and you sold it down and you made money. Okay. Had you been a stop bull, you waited until this candle was solid green and it traded above this and you made money. Okay. Had you been a stop bear, you waited until the candle was at its low, you sold this and you made money. Okay. So just by counting these bars, you now know that pretty much each side is in a trading range. Okay. Each side can make money. So let's continue this logic and let's see how this ends up. We got a green bar followed by a red bar. Green bar, red bar. Okay. Red bar, red bar. Red bar followed by red bar. Okay. Red bar followed by red bar. Another one. Red bar followed by red bar. Another one. Okay. Red bar followed by green bar. Red followed by green. Green followed by green. And green followed by green. And that'll take us to the end of this little chart snippet. Okay. So what do you see though? You're still in the trading range. Look, you've got 4, 5, 3, 2. There was no real side that was dominant, and that's what you would expect to see in a trading range. So just by looking at the bars, guys, just by looking at what's happening after each bar, you can decide what side to be on. Okay, so let's look at the most dominant side. It's just dominant by 1. It's red followed by red. Okay, what is red followed by red? Well, we just talked about it down here. Red followed by red is a stop bear. Red followed by red. If you sold at the bottom of this red bar to go down, you're a stop bear. Okay? Right? So we just talked about that. So let's look at how that would have worked if right here, stop bear, how many times did I make money? I made money here, I made money here, I made money here, I made money here, and that's it. I made money 4 times, basically, if I sold every bar on this chart that way. Okay? The next one, though, is the green followed by green. So what happens? Did I make money here? Well, it retraced all the way, so not really. Did I make money here? A little bit. Did I make money here? Nope. Did I make money here? Yes. Yes. And we don't know about that. So 1, 2, 3, 4 times out of 5 I made money. Okay? And then you look at the green followed by the red. So what's green followed by red? Let's just do it here. Let's make this green. You have a green bar going up, and then it's immediately followed by a red bar going down. Okay? Who made money here? Well, if the green bar went up and the red bar took it down, the limit bears made money because they waited for this green bar to form. They saw this as a great price to sell, and then they sold down below. Okay? And that's what you got here. They waited for this to form. They sold down below. Same thing here, even though it reversed. They waited for this bar to form. They sold it down below. They waited for this bar to form here. They sold it down below. Okay? They're probably waiting for this bar to form up here at the top of this range, and they're probably going to sell that down below on that next candle. Okay? So, trading range, just what you would expect in a trading range, is this. You would expect each market participant to be balanced, okay? And we knew that about right here. So we knew to trade like a trading range. So let's go to something a little bit different. Let's go to the trend one, okay? And once again, I have it here. And you can already see how it turns out. We don't have to go through it again in the interest of time. Green bar followed by green bar happened 5, 10, 13 times, okay? A green bar followed by a red bar happened 4 times. A red bar followed by a red bar happened 1 time. And a red bar followed by a green bar happened 4 times, okay? So Right away, though, you see the huge difference between a trading range where everything was pretty much balanced to a trend where there's an imbalance. Okay, there's an imbalance because all I had to do was buy above a green bar and I made money. Okay, and you can see that here. Made money, 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 all the way up. Okay, selling below a red bar, okay, a red bar, red and red, that only happened once, and it looks like it happened right here. You can't really see it because I got my black mark over it, but that's a red bar and a red bar. You make money here, you didn't make a lot, it reversed up, okay? Next participant, these two are balanced, okay? The green and the red, so the green and the red are balanced with the red and the green. The red and the green. Damn it. Sorry. And the green. These two are balanced. Okay? So what did you have here? You had green going up, and you had red going down. Okay? Limit bulls made money here. Or limit bears made money here. Okay? What did you have here? You had red going down, and you had the limit bulls at the bottom of this candle to buy it back up. Okay? But look at the overwhelming green on green. Green to green. Okay, so by here you had 1, 2, 3, 4, 5, 6. By here, this area here, you knew that green was dominating. So all you had to do was buy. All you had to do was be a green bar that bought above a green bar, and you would have made money during this spike. All right, let's do one more, and then this will be the end of the video here. Hope you thought this was cool. All right, now check this out. I did this a little differently now. Okay, so this is still red and green. Okay, but what I did was I wanted to know, I split up half the chart. So this red here, this red, where this arrow is, the red is when the transition happens, because this is a reversal. It was trending up and then it reversed down. Okay, so what you expect to see in that is you expect to see more green on the way up and more red on the way down. It's just logical, right? So right here on the way up, on all these black little black dots that I put on the bars, that's all of the black tallies. So on the way up, green for green was dominant, just like we had in this trend up here, right? So green for green was dominant, green and green. So you could buy above bars, okay? Green and green, you could buy above bars and you could make money, okay? But then when we shifted, red for red became dominant. So let's say that you're doing red for red became dominant, red and then red. So you could sell below bars and make money, okay? What's not dominant here? Well, what's not dominant is green for red, okay? Green to red, there was only one. Okay, there was only one after this move here, and that's here. That's the green to red. There was only one green bar. So you already know that you shouldn't be buying this because there's only one green bar. But red for red was 1, 2, 3, 4, 5, 6. So 6 different times red for red. Here, here, here. Let's say you start selling after the third one. Boom, boom. You made money both times. Okay? And then the red to green was non-dominant. So the red to green was non-dominant. What does that mean? That means that each time you sold, which you see here, you made money. If you sold the bottom of this, you made money. Because this, getting hit by a reload buyer at the bottom of a red bar, it only happened one time. It happened here, right here. Okay? All right, so let's go here to the middle of this range and let's see what the transition looks like. Okay, so let's look at this. Let's look at this range right here. Okay, and we're going to use the same matrix, but we're going to use a different color. We're going to make it blue, okay, to see how you could potentially spot reversals with this. So what do we have here? We have green bar, green, green. Oh, hold on. Green, green. Damn it. All right, green, green, 1. Okay. Green, red, 1. Green to red, 1. Okay. Red to red, 1. Okay. Red, I'm sorry, that's this one. Red to red is 1. Red to green, 1. Okay. So what do you notice here? What do you notice for the past couple of bars? You have equal 1, 2, 3, 4. You have equal market participants making money. And what is that? What is this? We went up and we went down. That's a trading range. It's the start of a trading range. Okay? So that tells you that most of the trends, even when they look like they just shoot up, and then even when it looks like a V reversal, there's some type of transition at the top. You just don't see it all the time based on the chart that you're on. Okay? But this is a transition. Okay, we went from all of this black, which is this part of the chart before this arrow, all this black being green, to all of this red here dominating. But in the middle, if you look at the middle bars of that, you had a transition. And that's what you would expect to see at the top of a trend, or at the bottom if it's going to reverse. But even when the reversal looks sharp, okay, there's still a transition. Okay, so let's keep going. So we got red to green. That was the last one. Let's do green. Green to green. Green to green. Got another green to green. Green to green. Another green to green. Green to green. Green to green again. Green to red. Green to red. That's this one here. Green to red. Red to red. Red to green. Red to green. Okay. Red to green. And then green to red. Green to red. Okay. So what do you see here? Well, if you're looking, the green to green is still dominant. Okay. Because of this leg up right here. Okay. The second most dominant, though, is the green to red. Okay, it's the green to red. So what does that tell you? What happens when something goes green? Oh, hold on, let me turn it green again. What happens when something goes green to red? Well, the stop or the limit bears waited until this candle was green, and then they sold it down. Okay? So if that's the second most green to red, right here, the second most from this entire transition, and it's happening late here, then this is what you should be doing next. All right, this is what you should be doing next, because it's showing you that not only is this coming to an end, but this is picking up steam. And then after that, if you kept counting, you got red to red. Okay. So I hope you enjoyed this. I hope this gives you a way to look at the chart and see what's going on. And this is market generated information. This is not something that I'm making up or something that I think is happening. This you can look at the chart. Is it followed by green or red? So I am going to tease you with this, and I'm only going to share this if this video gets a bunch of likes. I'm only going to make a video on it. I've coded this into an indicator, okay? And this is what it looks like, all right? And I want you to see the signals that it gives. The signals that I'm using right now is when red crosses over. So this red line is when a red follows a red, and the green is when green follows a green, okay? And you can see how they oscillate back and forth. All right, but these crosses are what I'm really concerned about. So let's just go through and see a couple turning points, and then I'll end this video here. All right, so we got red. You got red crossing over green. So that means that more red bars over the look back period, which is 50, more red bars are closing red after red, then green after green. And you see red cross over. And look at where that lines up with. Okay, it just kind of flows in that direction. Okay, let's see what happens when they cross again. They almost cross here, but they don't. And then green crosses briefly here, but then red comes and crosses over again, and you get a nice down move. But now you see that green is now crossing over red. Let's look at that one. Look at that cross there. Oh, hold on. There was a little bit more left in that trade. Okay, but then green came back down under red, but it kind of went into a chop. See how there's no real separation here? A little consolidation, and that's what you expect to see in the chart. Look at this consolidation. No side has conviction. No side is winning. Red or green briefly crossed over red, and you start to see a small trend up. You can see this is kind of sloping up. Okay, as long as green is above. All right, but then you start to see separation again. Green crossed over red, or red crossed down, however you want to look at it, but green is on top, and then you start to see a move to the upside. Okay, move to the upside, move to the upside. But what's happening here? What's happening in this area of the chart right here? You see how green is dominant, red gets close to a cross, doesn't cross, green comes back up. Okay, and then red starts to cross. I'm sorry, the chart starts to go down, but look, green's still on top. There's been no cross yet. So you're losing all of this, but green is still on top. And that's because what you don't see, which I'll show you in the next video, if you like and comment on this, I'll show you the other participants. There's another line on top of this line, and that's why you're not really seeing these two converge, because you have a lot of back and forth here. Okay, but they do almost come close here, and then green takes off again. All right, a couple more examples here. You have green here, green crossing over red here. Kind of late in the trend, but it did give you a signal, and there was still some left, a little bit left. All right, this one is nice. Consolidation. They're kind of commingling here, and then green crosses sharply over. Nice signal there. Okay, nice signal there. And then red crosses over here. Goes down a little bit. Picks up steam, has a little more separation. But then look at this. Green crosses over right here. Right here. See it right there? And what do you get after that? Get a nice uptrend. Okay? Red crosses over here. Just briefly though. Still going up. So let me know if you're interested in seeing a video about this. But I think what I've given you so far is enough to chew on. So don't know when I'll make a video again, guys. I know I suck, but I am still trading and I'm still involved in markets. So you'll get stuff from me from time to time. So comment, like, subscribe, and I'll keep making stuff. All right, peace.